I ended the week with a profit of $151. As you can see, I only took 4 trades, with the first one being a break even, the second one hitting TP, the third one being a loss, but this actually should not have been a loss. I was babysitting my trade, and that was the reason I manually closed the trade. Well, after I closed it, it went straight to TP. So I will be breaking that down also in this video. And the fourth one being a break even as well. So we will start with the first one, USD CZK. As you know, we always start off on the daily time frame. You can see this big bullish candle being the new impulse, followed by this correction of minimum 2 daily candles, and these 2 daily candles are also the same color. So now we have our setup. We're going to the weekly time frame. On the weekly time frame, we will identify our support or resistance that could be of influence. Right here, you see this level that was previously resistance got broken and turned into possibly a support level. So price came up, found resistance in that area, had a small retracement, then it burst through this level, now using this level as possibly a support level. So then we go back to the daily time frame. On the daily time frame, we will place our Fibonacci in the opposite direction of the correction. This is because we're going to measure the distance of the new impulse. So let's play our Fibonacci. Then we go to the 4 hour. On the 4 hour, we will wait for price to break the 61 level, followed by a retracement that will tap us in the trade. Then we can ride it all the way to TP. That will, as always, be the negative 27. So right here, we're just waiting and waiting. As you can see, price went lower than where we originally placed our Fibonacci, all the way until here. So you can just adjust your Fibonacci with this being the lowest point and move it all the way to the structure point. This will happen. That doesn't matter if it goes lower, you just adjust your Fibonacci and you go by the rules. You just wait again until price breaks the 61 level. So right here, you see price broke the 61 level. So normally we will place our retracement entry on the 68, but I entered the trade right here. So I didn't wait for the retracement to the 61 level. I just entered the trade right here. So let me place my long position too. Right now we are already in the trade. You could either just wait for price to retest, or I just entered it because it was also a 1 to 3 within market order. So right now we're in the trade and we are just waiting and waiting. As you can see, price has broken the 38 level and closed above it. This is an indication that we can place our stop loss to break even and enjoy a risk-free trade. So right now, the trade is break-free. But as you can see, price had a big retracement with this big wick right here, knocking us out at break even. And I did not re-enter the trade even though I saw it going back up. So this was the first trade that was the break even. Right now, we will be going to the next trade. That was ATP of Euro Australian dollar. So at the time, the trade was like this. Let me just put it back. A daily. So at the moment, this was the setup. You can see we have a big impulse, all the same color, breaking previous structure, closing above it, followed by a 2 candle retracement on the daily time frame, also being the same color. So then we go up to the weekly time frame. And on the weekly time frame, you see we will identify our support or resistance. Right here, I used this level as a weekly confirmation of support. So price came back to this level right here and had this big bullish candle indicating that there's possibly more momentum to the upside. So this was my support on the weekly. Then we go to the daily time frame. On the daily time frame, we draw our Fibonacci in the opposite direction. As you see right here, the price had already broken above the 61 level. So you can either choose not to enter the trade, because normally you would wait for price to break and retest after the two daily candle close with the retracement. But in this case, price was already above the 61 level and I still entered it. So I will put my buy limit on the 61 level, waiting for a retracement. So let's put our long position. I put it somewhere right there. Stop loss at the 88 and the TP will be the negative 27. Right now we wait until we're tapped into the trade. As you can see, price came back, tapped us into the trade. Now it already broke above the 38 level, so our stop loss is also going to break even, and we can enjoy a risk-free trade until TP is hit. And boom, TP got smashed, got smoked with a big candle spike right here, breaking all the way through TP. And this was the second trade that hit TP. Now we go to the third. The third one was Euro CHF. So let's go back to the daily and play it back. On the daily, you see we had a impulse, a nice strong impulse, breaking and closing below the previous structure point. Impulse is all one color. Retracement minimum 2 daily candles, also the same color. Now we have our setup. We go up to the weekly time frame. On the weekly time frame, we want to identify our areas of influence. So I couldn't find any particular area of influence other than price had a big move to the upside and was possibly coming back to retest this level right here and then find more momentum to go to the upside. So I couldn't find any areas that would be of great significance in my bearish analysis on the daily time frame. You could possibly say that price came to this level right here and found rejection to the downside. That will give your analysis more confidence, but that was not what I was looking for. Then we go back to the daily. On the daily, you will draw your Fibonacci in the opposite direction, like this. Go back to the 4 hour, wait for the break of the 61 level with the retracement. That will be our entry. Break of this 61 with the retracement, entry, TP. You know the drill. So right now we're just waiting. As you see, price had broken the 61 level. Boom. So we place our bearish tool right there, or bearish entry. TP will be above the 100 level. The stop loss will be above the 100 level, and the TP will be the negative 27. So let's place our entry. Short position right there and above. Now I had placed my stop loss not exactly under 100, but a bit higher, something like this. I'd included the spread from the broker that I used to trade. And our TP will be at the negative 27, and we are going for a 1 to 3, of course. So we adjust our entry point to create a 1 to 3. Now we're just waiting until we get hit and enter the trade. Right here you see price came back, hit our entry. So right now we are in the trade and we're waiting for the break of the 38 level to go from stop loss to break even. Boom, boom, boom. As you can see right here, price had this big retracement, almost hitting our TP. And normally I tell people don't babysit your trade, because those be the moments that you lose more than that you win. And in this case, I was babysitting the trade. So I saw price came all the way up here, almost hitting my TP, followed by a small rejection. So that was when I exited my trade. But as you can see, after price had that rejection, it just completely melted. And it ended up being a loss instead of being a win hitting TP. And that was the third trade that you saw of me losing the $56. So let's go to the last trade. And on the last trade, we go back to the daily time frame. We'll be looking for our setup. Let's rewind. You see right here, we had a nice impulse. We had a nice impulse, this impulse right here, followed by a nice retracement. But as you can already see that this retracement was very deep. That is also good. And it was slower than this impulse. So we go to the weekly time frame. On the weekly time frame, we'll be looking for areas of influence. On the weekly time frame, I couldn't necessarily identify an area that would be of significance in my trade. Something that I did identify was this impulse right here, breaking this structure area followed by a retracement and a bullish candle. So that gave me some confidence that price is likely going to go higher and continue its upward trend. So then we go back to the daily. On the daily, we draw our Fibonacci in the opposite direction to measure the new impulse. So let's put the Fibonacci on it. And then we go to the 4 hour, waiting for the break, followed by a retest. So right now, we're just waiting for the break. As you can see, we had a nice break right here. This big green candle breaking the 61. We'll place our entry either exactly on the 61 or somewhere around the 61. And the stop loss will go at the 88 in this case. As you see right here, structure, boom, follow downside, slight upside, followed by retracement. So price, the stop loss will be protected at this level. So let's place our long tool. TP negative 27, like that. And now we're in the trade and we're just waiting. As you can see right here, I think it was somewhere right here that I put my stop loss to break even because we were already at the end of the week. You can see this is Thursday. So for price to go from here all the way to my TP, it would have had a significant amount of volume that should come in and push the price all the way to TP. So I was thinking like, how big is the chance that price is still going to go from here all the way to my TP? And it was already Thursday night. It was already Thursday. So that was the reason I put my stop loss to break even. And that was the fourth break even trade. You can see we got stop out at break even. And then that was the end of the week. So this was my weekly breakdown, breaking down my 4 trades, my wins, my losses, break even, just to give you an indication of what a week looks like. So appreciate y'all staying through this whole breakdown. And I'll see y'all in a future video. Peace.